All right, all right, all right. Matt, the mortgage guy. In today's video, I'm going to do something a little bit different. For those of you who commented and wanted to see stuff on Denver, I'm going to dive into a couple specific markets. And we're going to look at inventory. We're going to look at historical appreciation. We're going to look at affordability, all kinds of stuff. I'm going to do Denver, Colorado, Sacramento, California. And if time permits, maybe I'll jump into another one. So stay tuned. Just going to go over some stats. I think it'll be kind of fun. I love when people interact. So let me know where you're at. If there's anything you'd like me to review and kind of talk about, I'm happy to. This one is a special one for folks who was asking about Denver. All right, Matt, the mortgage guy, mortgage broker out here in California, lend nationwide. And if you're looking to get in contact with me and my team, go to greatmortgagebroker.com. We're happy to help. Let us know where you're at and how we can help. I put out information on YouTube in relation to mortgage, real estate, what's going on in the market, real life stuff, conversations I'm having every single day. So without further ado, let's look at this. I think it's relatively interesting. Real estate report card, right? And special shout out to Barry Habib and my friends at MBS Highway. They have this really cool interactive software where I can type in any market, right? And get a real estate report card with a lot of good data. So Denver, Colorado's up first. It was a special request from a viewer. So here we go. First and foremost, these three diamonds for jobs, median income, and historical appreciation mean that it's in the top 10% of markets. So let me try to get my face out of the way so we can look at some of this data. Median home price in Denver County, $548,000. And then we've got some appreciation numbers. The historical numbers over here in purple, and then forecasted numbers for what's forecasted the next year or 5 years. A lot of these are relatively, in my opinion, conservative numbers on appreciation. As much as we've seen some wild appreciation, to have like 5.75 over the next year, or an average of 5% over the next 5 years is probably healthy and probably something that, is going to be welcomed. And this over here is just a forecast of, if we see these appreciation numbers that are forecasted, what you can expect buying a median home, right? You buy it for 548, 638. Today, in a year, it's worth 580. In 2 years, it's worth 603. In 3 years, 629, so on and so forth, to where, 5 years from now, that median home price, if forecast is correct, is going to be about 680,000, right? It's pretty expensive market from a median home price perspective. But like you'll see below, there's also, fairly high income compared to national averages in Denver, Colorado as well. Here's some really interesting stats, right? As far as the total population, how many of those are renters, and as important, like how many renters who can afford to purchase. There's 360,000 renters, which is, roughly half of the total population. And of those, 93,000 that can afford to purchase. That means only like 1 in 4 renters can afford to purchase, which is, says something about affordability in a market like Denver, right? And again, there's going to be an averaging of incomes that might make this number look a little bit worse than it truly is. But look at this homes for sale and year over year for inventory. 4 homes per 1,000 people for sale, and year over year inventory is down 15%. So if it was tough in 2021, might be even tougher in 2022 unless we see some more inventory. Demographics is cool to look at because in general, the people that are doing the most home buying are generally in their mid 30s, right? If you look at it, I think 34 to 36 is the age bracket where like the most homes are being built. There's a lot of 27 to 35 year olds. There's a lot of 36 to 44 year olds. So those two age demographics being the biggest will tell you that future demand is going to only increase, right? And you've heard me talk about supply and demand a lot. Over here on the right, we talk about household formations. Let me move my dome. You've got actual homes being built versus what's needed. Oh man, like it's actually on pace. That's cool. It's not even close to the case in Sacramento, as you'll see when I go through Sacramento. But these boxes, if there was any like blue boxes that weren't checked, that would mean like the actual versus the needed. Oh yeah, first time home purchases to be taken from inventory, 7285, and actual homes being built, 7335. So they're building enough to sustain like what like is being purchased, right? When there's a supply versus demand imbalance, you want that number to be higher, right? You want the added homes versus what's being purchased to be higher, so that like you can quell some of that excess demand, but at least they're on par, right? With what's being built. Oh, I see where they got it too, right? There's 15,000 household formations. If 48% home ownership rate applies, then there's 7,200 people that will be buying, and there's 7,300 homes being built. So that's kind of a cool stat to look at. Total employment in thousands, 550,000. Here's the median income, which is 93,000 versus the national average of 55,000. So, if you got a median income that's over 50% higher than the national average, but they have high home prices, right? And here's the affordability index. A reading of 100 means that a household earning the median income can afford the median home price with 20% down. So when it's below 100, like if you've got this median income of 93,000 with 20% down, you can afford the median home price 548, right? Looks like it dipped below 100 in 2018. It got up to 110 because of low rates. Then as rates went up and home prices also went up, this affordability index down to 90. You're seeing this all over the country. And this is why conversations I'm having and real estate agents, consumers, my buddy Mike Zuber, affordability is a problem. Affordability is going to pull demand down over these next 3, 6, 12, 24 months, right? It just has to, right? Because this is happening all over the place. So that's a little snapshot of Denver, Colorado. Let me know if there's anything happening in that market that you're seeing that might be added to this. But here's just some stats. I thought these were pretty cool to look at. And I'm just going to pop into Sacramento, California, because I'm curious as much as anything else what the stats look like in California, or in Sacramento specifically, where I'm at, where I think like inventory is super low. This 4 houses per 1,000 people in Denver, I would guess that Sacramento's even less. I would guess that year over year, our inventory is even lower. Look at this appreciation forecast for like the next 5 years, up 36%. Pretty wild to think about. I wonder where these historical appreciation numbers came from. It seems like these numbers are low for the last 5 and 10 years. I'll have to look at that. But look at the these 3 diamonds, meaning top 10% in the nation, like 1 year and 5 year appreciation forecast, top 10% in the nation on both of those, top 10% in the nation in jobs and historical appreciation. So if these numbers hold true, these forecasts are correct, this 495,000 median home price, we'll call it $500,000, could be 675,000 in 5 years. That's wild. That's wild. Let's sneak down to 73,000 in median income. I knew we weren't as high as Denver, but we're still, call it 20 to 30% above the national average, right? I guess about 30%. Homes for sale, 2 per 1,000 people, so half of the inventory as Denver. And look, year over year is down 30%. So it was tough in 2021. It's tough with 30% less inventory in 2022. We hope that more inventory comes on. We hope that, some of this, spring home buying season, when more people put it on, helps us. But check this out over here. This is another one that doesn't surprise me. Household formations of 22,000, because we've got all kinds of 27 to 35-year-olds. 54% home ownership rate means that we need 12,000 homes being built, and 3,100 is the number. That is not a good sign for the future of supply, the future of affordability, because these numbers impact these appreciation numbers. If there's more demand than there's supply, home prices go up. Yes, demand is going to come down. Yes, raising prices and raising interest rates is going to cause demand to come down. But if supply comes down right along with it, we don't get to even out the teeter-totter. Another, I guess, unfortunate number here, 25% of the renters can afford to buy, which, there's no other way to put it, but that sucks, right? The affordability index on a steady decline with rates increasing and home prices increasing. Now we're at 86%. Thing about this that I would add is this is talking about a household earning the median income, putting 20% down. Vast majority of folks with 73,000 in annual income don't have 20% to put down, right? So it makes it even tougher, where you either have to go somewhere where you can get a house 20% cheaper. I know there's still stuff available at 400,000, maybe not the most desirable neighborhood, maybe not the biggest or shiniest, nicest house, but it's a way to break into the market. And that's what's happening, right? Is people are, settling for less of a house in less of a neighborhood, or not buying at all, right? So anyhow, just a quick look, what's going on, some stats. Let me know if there's, anything glaring that sticks out to you, anything you want to add. Happy to chat about it. Just thought this would be an interesting one. And since somebody asked about Denver, you got Denver, and I threw in Sacramento as a second one just for funsies. You guys have a great day. And until next time, we gonna see.